Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 4th of March. All right, now some major developments, obviously. The Fed with a surprise cut of 0.5% now. This has pushed a few of the currencies higher. Now, don't forget, that surprise cut was expected, right? I know I sort of put on the side it was, possibly rolled out to the 18th of March, but they were expecting a cut within days. So that's why we haven't seen too much of a huge move. Otherwise, outside of that, you would have seen something dramatic. Aussie and Kiwi just coming back to test resistance. Okay, they've gone through a couple of weak little levels, but they do have still major resistance here. Dollar yen, it's sort of diffused the safe haven trade somewhat. Okay, it's now sort of drifting sideways. So what the central banks have done, they've actually taken the pressure off the market somewhat. Right. And now the market's trying to work out, is this good or bad or indifferent? And it can take 24 to 48 hours before they work that out. Now, Euro still slowly cruising to the top side. As you can see, no one really wants to buy Euro. This is a weak dollar move, not a strong Euro move. So Euro is struggling up here, and I'm not surprised it's not running to the top side because there's nothing really good in Europe to be getting excited about. And sterling, well, it's dipped under 128.46 a few days back and now just sort of drifting sideways. Caught between central banks or the Fed in particular cutting rates, the EU-UK trade talks. It's pretty hard to work out what the hell's going on in sterling. Dollar CAD, well, you wouldn't even know anything had happened, right? And this is very important because we do have the Bank of Canada coming out today, with their interest rate meeting. So that's going to be an integral part of what we need to be focusing on. Just bringing you across here to look at, just check out what the dollar index is doing. So you can see the dollar index is sort of drifting lower, but by no stretch is this a panic sell-off in the dollar, right? If anything, everything is stabilized since the Fed cut rates. So, and now if I actually just give you a bit more of a detailed look at the whole risk on, risk off profile, I'll tell you what is a bit of an alarm bell for me. They cut rates, especially by 1/4 or 0.5%, and the Dow closes down. I tell you, that's a very bad sign. Right? Equity markets should be through the roof. They aren't. So there's a major imbalance here, and we need to be very careful with where the next major move comes from. Usually, as I said, it takes 24, 48 hours for the markets to settle down. The fundamentals will come back into play. To me, still, if you read historically about viruses or pandemics, this is by no stretch anywhere near anything else that's happened, right? So I think this is just the media blowing this thing up, and it's the central banks have already acted. Now, the yen crosses here, okay, they're not exactly racing to the top side, and they're not falling, right? So the whole risk on, risk off situation, as I said, has been diffused. What we need to see is the US North American market come on, see what the numbers, the data that comes out today, give us some sort of lead in, because otherwise we're not seeing too much. Gold pretty stagnant, and there's not a hell of a lot to sort of take out of it just at the moment. This is only a slight little speed bump. Okay, if I just come into the daily trade routine, just having a look here, like focusing on the core elements of the market. Market conditions, well, they're pretty crap, right? The market's confused with what to do. Do they buy Aussie, sell Aussie? Do they get involved in the other major pairs with the Fed cutting rates? It's very hard to work out at the moment. Now, obviously, the situation is we've got the geopolitical event, the coronavirus situation is the main catalyst for this. I tell you what, I could see this disappearing very quickly, and these central banks having to reverse these opportunities. Now, active pairs for me haven't changed anything. If anything, dollar Swiss has come back into play as a strong sell. That Swiss safe haven with a weak dollar looks like a pretty good situation. We don't have optimum entry levels at this point, but we do have fundamental drivers, and I'll show you those in a second. The other pairs at the top here, I still like them, right? I still like these pairs. They are active. Aussie and Kiwi have not corrected their current downtrends. What they've done is they've just taken a bit of pressure off them, and whilst the market works out what's going on, I've gone from a strong sell just to a sell. And Euro Aussie a buy, but we're lacking a few levels here to get into Euro Aussie. But they're the active pairs that I'm sort of focusing on. The pairs below that, the watch list pairs, well, I'll tell you what, dollar CAD, it's in play, but well, I'm waiting to see what happens. I'll tell you why it's in play, and that's the Bank of Canada interest rate decision tonight. Or today, I should say. The euro, well, it's going up, but really lacks drive. And as I said, this is a weak dollar move, not a strong euro move. Makes it pretty tricky. The other pairs there, well, dollar yen still lower, but you know what? It's lacking direction, and it's all geopolitical, and that's why I've got it on the watch list. Now, coming down to where your focus should be, looking at we've got Eurozone retail sales. Now, this is a pretty mild number, right? You'd need extreme variance or very large variance to get the ball rolling here, but you know what? It is coming up. And then you come back into the North American numbers. We do have a couple of things coming out. We've got the ADP non-farm employment change. Now, this is a different stat to the non-farm payrolls itself, right? So don't get caught up in this being the main game. The main game is Friday's non-farm payrolls. I can tell you with the current markets, it's going to be a very interesting release. And then most importantly, what we do have coming out is we'll get the ISM non-manufacturing numbers. They're a pretty solid number for the dollar and can give it direction. But funnily enough, they are coming out at the same time as the Bank of Canada interest rate decision and statement, right? Now, this is, I'd be very surprised if the Bank of Canada didn't ease by 0.25, right? You think with the central banks, they sort of get on the phone calls occasionally. To me, when you look at the overall situation here, I just come back to the data that's due. Looking at the numbers here, I mean, the central banks do talk to each other. There is a slight expectation here. If you come to the rate decision, look at the range 1.5 to 1.75. So there is a chance of a cut. I think they have to go if they want to get some sort of stability and confidence back in the market. I think we'll see 0.25. What does it do to dollar CAD? Probably not much, right? These moves aren't economic driven, right? So with that, when I start to look at dollar CAD, and if I just bring you across to back into the chart here, because this is, where you're going to be focusing on dollar CAD and the CAD crosses. Look at the price action here. Oil, back at $47.60. Everything's waiting for something to happen. Now, I would expect sort of similar to what the RBA sort of did. It's expected a 0.25 cut or a 0.5. Usually get a move down, move up, and it sort of sits back to where it sort of starts. As I said, this isn't clear trading opportunities. If it was economic driven, I'd be getting very excited, but it's not. And it doesn't make for good trading opportunities when that's the case. So what have we got now? Just coming back to the data, right? If I just bring that screen back across. Okay, so what we're looking for is some of these numbers to come into play. Now, with the equity markets, now traders are going to be a bit confused with what happened yesterday. Cut rates, equities are down. So you're going to be looking very closely at these US numbers. I'd say more so the non-manufacturing numbers. Having a look to see if there is variance in these numbers, what impact it has on the equity markets and the dollar itself, right? We're starting from ground zero again, where we need to start to get some dollar momentum. The Fed has sort of blown that all out of whack, and that's what we're sort of waiting for. So when those numbers do drop, I would be very inclined and even encourage you to sort of get up your meta stock if you have it. Keep an eye on the US equity markets, right? This is where direction's coming from at the moment. This is where the pain is, right? So keep an eye on those. Obviously, keep an eye on the bonds as well, but watch the equity markets. See if there's any if it makes sense, then we may have an opportunity. If there's no variance in those numbers, then we're really going to wait and see. And I would be sort of really probably encouraging you to hang tight and wait for the Bank of Canada, because what you're going to be looking for is, if you have a look across the CAD pairs, I'll just get those up for you. This is where the opportunity is going to be, and you've got to start digging a little bit deeper. So you can take the US dollar out of it by getting into the CAD crosses, right? So that's, I just get that screen across. Keep a very close eye on these. To me, well, you know what? Oil has been diffused, or the moves in oil. So CAD yen is a little bit neutral. CAD Swiss, as I said, the Swiss is rallying against everything at the moment. That could be possibly a good pair. The rest of the pairs, well, Aussie CAD's up on its highs. That's not a bad opportunity. Euro CAD sort of moving to the top side. Once again, with dollar CAD moving sideways, this is very reflective of the other major currency pairs. So just try and have a look through those crosses. You might find a diamond in the rough in those pairs. Outside of that, I would be very inclined to sort of sit back and just watch a bit. If anything, as we go through these opportunities, as I said, I'm focusing on these pairs up here, the active pairs. I would expect the opportunities to fall here. We've got the US numbers. That's where the action is. Don't go chasing the really cranky stuff. And what I mean by that is, if you're looking for something cranky where there's a huge amount of volatility and not a lot of sense, it's the central bank meetings at the moment. So just be careful of that. Careful what you wish for. Still going to take a little bit of time for the market to work out what the implications are for the recent 2 rate cuts by the RBA and the Fed. All right, so sort of overall tricky market conditions. As I said, the risk on, risk off. You got to keep an eye on this as it goes forward. But one surprising thing I meant to mention is dollar yuan starting to rally. Right, they're buying China again. This is like, why? Why are they buying China? Is there something we don't know? I would suspect so. But anyway, keep an eye on the markets, keep an eye on the equity markets, and keep an eye on the data, right? This is where really detailed experience comes into play. All right, guys, all the best. These are tricky markets, so don't go mad. Decrease your trade size and give your positions a chance to shine. All right, cheerio.